Hey Bruin fans, want to go behind the scenes with your favorite teams and athletes? How about getting exclusive merch and opportunities to enter sweepstakes like sideline access at the Rose Bowl? Introducing Blue and Gold Society, UCLA Athletics fan membership program created to support Bruin student athletes. Members receive benefits like exclusive gear, videos featuring insider stories, and incredible experiences courtesy of UCLA Athletics. Sign up today at blueandgoldsociety.com.
Good afternoon. We're getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson at 3 and just before the 790 KBC News Blitz with my pal Randy Wang at 5. Live on the air, Mottek On Money, 790 KBC, streaming live online worldwide at kbc.com. And, of course, the on-demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, all your favorite podcast platforms. The stock market taking a breather from record highs today. Stocks pulling back a bit after a record-shattering winning streak. Fed Chairman Jerome Powell taking the spotlight today, signaling the Fed would proceed cautiously on further rate cuts and suggested stocks were, in his words, fairly highly valued. The Dow coming down from its record high, down 89 points at the close at 46,293. The S&P 500 down 37 at 6,657. And the NASDAQ tumbled 215 points, 22,573. All the major averages pulling back from all-time highs. NVIDIA also off its all-time high, closing down more than $5 at 178.43. The yield in the 10-year note, which was at 4.03% about a week ago, is back to 4.11%. The price of gold also kissing record highs above $3,800 an ounce. $3,815 and change was the highest I saw today. Right now it's hovering just below $3,800. And silver kissed a new 14-year high today, getting up to around $44.57. Right now it's hovering just above $44 an ounce. We'll talk about gold and the Fed chairman's comments with AXEL MERK later this hour. AXEL MERK is president and chief investment officer of MERK Investments, which includes the VanEck MERK Gold ETF, OUNZ. He's also an economist and author of the book Sustainable Wealth. ABC TV's parent company, Disney, bringing back the Jimmy Kimmel Show after a week-long suspension following his controversial comments about the assassination of Charlie Kirk. But the show's not returning everywhere because broadcasters Sinclair and Nexstar, two media companies that own 39 and 20 ABC affiliate stations, respectively, have announced they will continue to preempt the show even as it returns to the network. I'll discuss the very latest on that with media and PR expert Michael Levine, who will be joining me live later this hour. But first, on your money, the markets, the economy, the Fed chairman's comments, crypto, gold, the whole works now. Joining us live is John NAJARIAN. Dr. J, as he's known on the major financial networks, co-founder of Market Rebellion and co-author with his brother Pete of the very popular book, It's Not an Option. How to Trade Options is no longer an option. It's a necessity. John NAJARIAN, thank you very much for coming to the line here this afternoon.
Oh, it's always a pleasure, Frank. Thank you so much, sir.
Thank you very much. And everyone was glued to Fed Chairman Powell's comments after President Trump's speech today at the UN, of course, as well. The Fed Chairman throwing cold water on the rally, suggesting that the Fed would move cautiously after resuming rate cuts last week. Down a quarter point is what he announced last week, and the expectation was we'd get two more rate cuts before the end of the year. And then he also had something to say about stocks, saying equity prices are fairly highly valued. Give us a reaction to his comments and the pullback from the record highs that we've seen.
Well, first of all, Jerome Powell is not a stock trader. That won't stop him from commenting on it. He is a very smart man, and he's a private equity guy. And private equity guys have years to hold their positions. I would remind all the investor types out there of that fact. And I think overall he is, again, very attuned to the market. But I'd point out the following fact, and I'd encourage your listeners to use ChatGPT or Grok to check me on it. There have been 4 Fed governors, Greenspan, Bernanke, Yellen, and now Powell, that have commented on stocks since 1987. They have been right 50% of the time. And a 50% hitting average in Major League Baseball, which would, of course, translate to 500, would put you in the Hall of Fame, and they'd build statues, and they'd be singing songs about you. 50% in the stock market means you're losing money regularly. And on top of which, the timing of these Fed chairmen, including most famously perhaps Alan Greenspan's irrational exuberance comment, took 2 years to play out. Now, you and I know, Frank, that the market moves a lot every day. If you can wait for 2 years and withstand a rally that goes on for months and months, let alone years and years, and be on the short side, I would encourage you to not hesitate to basically go see a doctor, because you're probably going to be broke and you're probably not going to be able to survive that kind of pain. So I guess what I'm trying to say is that the Fed chairman, all four, have made such proclamations in the past. They have been right 50% of the time, but it has taken 2 years or more for them to end up being right. So people joke about weathermen and weatherwomen being right about, if you say it's going to rain, you got a 50-50 shot. It either isn't or is. And I think the same is true with these Fed governors, including the Fed chairman. So I wasn't terribly concerned about what he said. The market didn't make that much of a move based on what he said. And I would bet you, Frank, a nice dinner at one of your favorite places in LA, that by the end of the week, we are higher again.
On the air live with the one and only John NAJARIAN. Thank you very much for that very thoughtful answer, and absolutely, I can't wait to see you back here in Beverly Hills. By the way, John, so that's long overdue. And you just reminded, we have economists to make meteorologists look good. That's the famous expression. And,
yes,
and by the way,
do.
Jerome Powell is not an economist. He's an attorney with that private equity experience, as you properly noted. So that is very interesting. And, of course, remember Janet Yellen mentioned something about biotech stocks, saying that they were overpriced years ago. And that's something else that you reminded me about, along with the other comments from Greenspan and the others. So let me ask you this. What about the expectation here now about interest rate cuts, which fuel this latest rally, it seems, when the Fed cut rates by a 0.25 percentage point, and the expectation is we'll get more cuts. What do you see ahead on the rate cut front? And it looks like you're still bullish on the market here.
Yeah, I would think we're going to see more rate cuts. I know Austin Goolsbee is supporting Jerome Powell in that he would say we are not likely to see an acceleration of rate cuts. But keep in mind, we waited 10 months for this one. I think we're going to get more rate cuts going forward, perhaps more than the two that they've already talked about, because as the economy needs it, and as Germany, for instance, is struggling, and its rates are down to 2.7%, I think we are nonetheless obviously one of the strongest economies, if not the strongest economy in the world. And we're looking at interest rates that are, as you just quoted, the same 10-year that I quoted in Germany is 4.11% in the United States. Doesn't make any sense to me, Frank, that our interest rates should be so much higher than Germany's, except that the Fed is playing politics.
On there live with John NAJARIAN. And John, we see gold at a record high today, above 3,800 an ounce. 3,815, almost 3,816 was the high water mark we reached today, and it's just below 3,800 now. I know you follow analog gold, good old gold, as well as digital gold. So let me get your thoughts and comments, first of all, on gold hitting record highs again today, and Bitcoin, by the way, not participating in this tech rally as we've seen in the past, with the NASDAQ hitting record highs this week. Bitcoin off its all-time high, hovering around 112,000 here. Give us your thoughts on analog gold and digital gold here.
All right. Analog gold always has its place in an investor's portfolio, especially the more diversified you need to be, the more likely you are to have some gold. And I think investors that are not comfortable holding Bitcoin in hardware wallets, software wallets, and the like are the most likely to be in and holding gold because it's something you can touch, feel, and understand. The more people worry about what might be going on in the world, whether it's Russia flying too close to Poland's borders or an acceleration of some of the threats that have gone both ways from Europe to Russia and Russia to Europe. I don't think we're going to be looking at World War III over there, but every time the war hawks get their chance, they push that idea. And obviously it's good for defense stocks. It's not good for markets. That does also happen to be pretty good for energy, in particular, of course, crude oil and nat gas, and both of which have been rallying on this news.
On there live with John NAJARIAN. We got Bitcoin here at around 112,000, well below its record high, which was hit a few months ago, above 124,000. What's going on here with Bitcoin, and where do you see Bitcoin go from here?
I still like Bitcoin as a store of value, but I like several other ways to play the digital asset classes that are available to us right now. One of them is these digital asset treasuries, DATS or DATS. And I think there's one that just makes so much sense to me, BNC, which is basically a company that formerly was really just involved in consumer products and now has just added hundreds of millions of dollars of Binance, BNB. And that's what they hold in that company. Americans, unless they're using a VPN, a virtual private network, they're prohibited from buying or selling BNB, but it is one of the most popular cryptos on earth. And it has had an astonishing move to the upside this year. I'd encourage any of your crypto guys to check it out. The ones that are really into it, the OGs and so forth, would say, oh my gosh, of course, John, this thing's up dramatically this year, so much more than Bitcoin or Solana or Doge or Ethereum. That's all true. And it's partially because Americans can't own it unless they do it through a VPN. And I think that's one of the driving forces here for BNC, which is a publicly traded stock that will move to the upside along with the value of that BNB, the coin itself, the token.
On there live with John NAJARIAN, very interesting. And of course, a lot of companies are expressing interest and have actually gotten into these DATs, digital asset treasuries, and most famously Michael Saylor's outfit, Strategy Right, and BitMine with Ethereum. What are your thoughts on those names and your guidance when people hear about DATs, and that seems to be what's giving a lot of names sizzle these days?
Yeah, well, it's given them sizzle for all the right reasons, I think. Again, there are still, Frank, and you know this from being around investors, an awful lot of investors that are not comfortable with hardware wallets, software wallets, and the like. And yet they've seen things like FTX where, oh, you left it on that exchange, not your keys, not your Bitcoin, that kind of expression. Well, I think a lot of people that would like to be involved, even if it's relatively small, in digital assets are definitely moving over towards publicly traded vehicles like ETFs and, of course, now like these DATs. And I think that's something that's going to continue for several years while these build, billions and billions of dollars of assets, just like Michael Saylor has done. And right now, I think I checked last week, Frank, there were 145 digital asset treasuries, DATs. They hold over 800,000 Bitcoins. And then you've got the rest of them that hold Ethereum, Solana, and Binance and so forth. So I think we're going to see a lot more of exactly that, and BNC is one of my favorite ways to play it right now.
Very interesting. What about Intel and what about Oracle? Those names have been in the news again this week.
Yeah, both of those are rails that anything in the AI space has to ride on. And so I really like Oracle. And of course, you can't help but like NVIDIA and, of course, that big investment they made in OpenAI. Sam Altman is continuing to kill it, doing so many things right. And I think we're going to continue to see that. And I think a lot of us really just wish that we'd. I think a lot of us wish we would have listened more closely to him as he was detailing his vision for AI.
Fantastic. Steak dinner as soon as you come back to Beverly Hills. I'll let you get to dinner now. John, thank you very, very much for joining us live here on all this big news here once again. John NAJARIAN, thank you very much for taking the call live here on Mottek On Money.
Thank you, Frank. Have a great night, everyone.
Thank you very much. That is the one and only John NAJARIAN, Dr. J as he's known on the major financial networks, and co-author with his brother Pete of the book, It's Not an Option. Check it out. Out to the freeways we go now on 790 KABC. Mottek On Money continues, 790 KABC. Good afternoon. Stocks pulling back from record highs today. The Dow down 89 at the closing bell at 46,293. The S&P 500 down 37 at 6,657. And the NASDAQ down 215 at 22,573. The focus of attention today, comments by Fed Chairman Jerome Powell. He gave a speech today in Rhode Island, and looks like he threw some cold water on the record-shattering rally, namely mentioning that, he said near-term risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. Basically, he said they're trying to balance the dual mandate at the moment. He also said during a Q&A part of his speech that by many measures, he said in his words, equity prices are fairly highly valued. Those comments took some of the steam out of the market today after a record-shattering rally over the past several trading sessions. The Fed chairman's comments now setting the stage for the Fed's preferred inflation gauge. That's what we're told is the Fed's preferred inflation gauge, the Personal Consumption Expenditures Index. The next reading we'll be getting on inflation, that'll be out first thing Friday morning. And, of course, investors in the markets will be looking for signs that inflation is not heating up, which could dent high expectations for 2 more rate reductions this year. We also got a reading on business activity showing it cooled this month while a measure of prices paid for materials jumped, indicating price pressures are persisting. Also in the spotlight today, Micron Technology's quarterly earnings. Looks like Micron stock today did end the day higher, up 58 cents at $29.34, and that'll be back in focus tomorrow morning on its earnings news. The memory chip makers' results out, and looks like that stock will be in the spotlight first thing tomorrow morning. NVIDIA, of course, hitting record highs this week, pulling back today, down more than $5 at $178 and change. Apple down nearly $2 at $254.43. Oracle, after that pop yesterday, pulling back more than $14 today at $313.83. And taking a look at the price of gold today, hitting record highs above $3,800 an ounce. We'll be taking a closer look at that big news coming up with AXEL MERK here live in just a few moments. Price of gold right now pulling back about $18 at $3,797 and change. Got up to around $3,815 and change earlier today. Bitmine down 61 cents at $54.49. Silver, by the way, got up to around $44.57. High seen in 14 years. Right now down about 24 cents here at $44.37 an ounce. Turning to the cryptos now, we see a Bitcoin up about 500, back above 112,000. Ethereum at 4,188. Solana at 215. Doge at 24 cents. And crude oil futures hovering just below $64 a barrel. And now the latest news on 790 KABC.
Hey, Bruin fans, want to go behind the scenes with your favorite teams and athletes? How about getting exclusive merch and opportunities to enter sweepstakes like sideline access at the Rose Bowl? Introducing Blue and Gold Society, UCLA Athletics fan membership program created to support Bruin student athletes. Members receive benefits like exclusive gear, videos featuring insider stories, and incredible experiences courtesy of UCLA Athletics. Sign up today at blueandgoldsociety.com.
Hi, I'm Joe Saul-Sehy, host of the Stacking Benjamin Show. Every week, we talk to experts about personal finance trends.
While we were talking, I had to jump on ChatGPT real quick.
ChatGPT said, cut up the cards.
It said, hey, knucklehead, weren't you just talking about investing in dollar cost averaging? Why don't you save a few bucks?
You never knew personal finance could be this fun.
If you're bored, don't start messing with your investment.
Get a hobby, man.
Get into photography.
Buy an airplane.
Guess what investment I made? The one that keeps on giving. Stacking Benjamins. Follow and listen on your favorite platform.
Mottek On Money continues, 790 KABC. Stocks pulling back from record highs today. Gold extending its record-shattering rally above 3,800 an ounce. Silver touched a 14-year high, getting close to $45 an ounce. Platinum moving above $1,500 an ounce. The U.S. dollar holding fairly steady against major currencies as investors took in the latest comments from Fed Chairman Jerome Powell. The euro up slightly, and looks like the pound sterling was flat against the dollar at about 135. The Fed chairman taking the spotlight today, giving a speech back east, saying the Fed needed to continue balancing the competing risks of high inflation and a weakening job market in coming interest rate decisions. He pretty much stuck to the script, to the language that we heard last week when he held that big news conference after the Fed announced the rate cut by a quarter percentage point. The price of gold kissing at record highs today. Let's bring in the expert on all of these matters. Joining us live now is AXEL MERK, the president and chief investment officer of MERK Investments, which includes the VanEck MERK Gold ETF, OUNZ. He's also a currency expert, also an economist, and author of the book Sustainable Wealth. AXEL MERK, thank you very much for taking the call live with us here this afternoon.
Great to be with you. It seems like price of gold is up every time we talk, so maybe we should talk more often.
That sounds like a good idea, and it's always great to speak with you, AXEL. First of all, your reaction to what we heard from the Fed chairman in that speech and then that Q&A session today.
Well, he somewhat stuck to the script. That said, he was much more pointing to what he should say, meaning that they are, quote-unquote, data-dependent, they'll take a meeting at a time, and all of that may sound cryptic to quote a general audience, but one of the things that has happened of late is everybody, including Powell for that matter, was bending over backwards, telling them how they're going to cut rates, how many cuts they're going to have. The problem with that is that these folks, and you can agree or disagree with the specifics, but they should go into every meeting with an open mind, because otherwise you have a cognitive bias, and when data comes in that disagrees with that, it's more difficult for them to change their view. They'll be put into a corner. And of course, the big issue is that they don't have a grand strategy in all of this, and that they are somewhat of a debating club. But at least today he said the appropriate thing. And by the way, yes, inflation is still a risk out there, and the market, at least the equity market, took note of that. The bond market somewhat brushed it off.
Very interesting. And he also made some comments about equities, about stocks, saying they were fairly highly valued. Our previous guest, John NAJARIAN, noted some previous comments when the head of the Fed made comments about the stock market. This is not something that's that unusual, but here he is commenting at a time when the stock market was at a record high, and then it pulled back on his comments here today. What about this comment that he made about the market levels today?
Well, the fundamental challenge is that the Federal Reserve is not in the business of managing asset prices. Now, some people might disagree because Bernanke, some people may remember, said, high valuations are good for consumer spending. But ultimately, the Fed, of course, has a mandate for inflation, for unemployment, maybe financial stability. If you target asset prices, it's a fool's errand. And then Greenspan, the former Fed chair, noticed that when he talked about irrational exuberance. Then it was still years before the quote-unquote the bubble burst. The one thing, if central bankers were concerned about asset prices, but Powell didn't go down that road, they could say that credit spreads are too tight. And the reason why I mentioned that, and this may sound arcane, but when credit spreads are too tight, that means risk is too low in the market. Junk should be selling at a discount, so to speak. And so there you can tighten monetary policy to exert pressure on that. That would provide pressure on the overall market. But to flat out say, hey, asset prices are high, that's really none of the Fed's business. And so their concern should be about financial stability. And so it's human, but they should get their basic work done properly, and they have plenty of work cut out for them on that front.
All right. The other reaction we saw today, in addition to stocks pulling back from record highs, gold kissing record highs today, above 3,800 an ounce. We've been talking for many years. Axel, did you ever think you'd see gold this high? And what's your reaction to this latest record rally here today?
Well, yes, I don't like to talk about price targets, but the reason why in the early 2000s I started investing in gold and have since expanded on that is because if there's one thing sure is that policymakers, especially on the fiscal side, take the easy way out. We're not fixing the big entitlement issues and whatnot. And views that have been more on the fringe, you've covered them for years, but they are gradually making it to the mainstream. And in part because this market is fairly small, when more people pay attention, you have prices move in both gold and the miners. And we'll have to see how this plays out. But I'm not all that surprised by it. Now, clearly, of late, the trend has accelerated, and speculators that have mostly been in the meme stocks and with cryptocurrencies are dabbling here with precious metals again. Speculators are not very loyal. They mostly increase volatility. But for the time being, the upward volatility is something that we'll gladly take.
All right, and we're watching silver make an impressive run this year, and platinum above 1,500. There was a time when the platinum was double the price of gold. You've been following this for many, many years. What are your thoughts about these other metals moves?
Well, silver is kind of a very frustrating metal for many investors because on the one hand, it's a monetary metal. On the other hand, it has industrial use. And so when people are negative on the economy, then silver tends to suffer, even if the Fed is lowering rates. And so one way to interpret this, and I don't want to overinterpret this, is that for the time being anyway, that maybe the softening economy is only softening a little bit, and it might help silver to go higher. And then most notably, though, I think a lot of it reflects that the Federal Reserve is taking its eye off inflation. In many ways, might be repeating the mistakes of the 1970s, where it's going to give priority to employment over inflation, egged on, of course, by politics that we need to push growth at any cost. And we might get the growth, but in the meantime, precious metals seem to be enjoying the ride.
All right, what are your thoughts about the dollar at this point? I guess there's a debate on whether the dollar has weakened or hasn't weakened, or what's really going on with the dollar at this point compared to other currencies. Maybe you can give us an update on what you see happening in the currency space.
Let's keep in mind that in the U.S., we're pricing in a series of rate cuts, and while we're spending too much, we on a relative basis are trying to contain things a little bit at least. Whereas in Europe in particular, they want to spend a gazillion on defense and infrastructure. Year to date, you mentioned currencies, the Swedish krona is the best performing major currency. In that country, they have the highest percentage of defense spending as part of the GDP. And that's just a reflection that a lot of money is being spent, and that can help a currency when you have more growth from that point of view. And you can achieve growth with deficit spending, and that's what we see happening there. And obviously, that's also a support for precious metals. And now the dollar has weakened quite significantly, and the dollar is much stronger than many would have anticipated at the beginning of the year. A lot will depend who President Trump will nominate as the next Fed chair, and because that will really signal the direction. And in the meantime, a lot of what we're seeing is just noise.
Very interesting. Rarely hear the Swedish currency quoted, but it is also be noted that Sweden became a member of NATO last year, so they are increasing their defense spending, and that's something that we're watching very closely as well. And any thoughts on who the next Fed chair might be or should be?
Well, there are three choices. On the one end, there is Kevin Warsh. He is the former Fed governor. He is somebody who a lot of the criticism that's happening at the Fed, he has been giving for years. both on governance but also on economic data. He said the Fed has to focus more on real-time data. That would be a change in substance. Then a likely choice is that there's just going to be just anyone, quote unquote, that we're going to get more of the same, and it's going to be a punching bag, good for politics. And then at the other end of the spectrum is somebody who is a real dove, somebody who's going to do exactly what the administration wants them to do. I don't think such a person will get the confirmation. That would be terrible because the long-term borrowing rates would be shooting higher. And so my preferred choice would be Kevin Warsh. Now, he has a bit of a hawkish reputation, although he has said he would cut rates. He's mostly clear, unlike most of these other folks, on what he wants. And so if we want an improvement and fix the underlying ailments, I think Kevin Warsh would be the appropriate choice.
Axel, thank you very much for joining us live here on this big news day here. Always appreciate it. That is Axel MERK, President and Chief Investment Officer of MERK Investments, which includes the VanEck MERK Gold ETF. OUNZ is the ticker symbol. He's also an economist, currency expert, and author of the book Sustainable Wealth. Axel, thank you very much for joining us live here this afternoon.
My pleasure.
Out to the freeways we go now on 790 KABC.
Bruin fans, fall is finally here. That means UCLA football is back in your life. Head out to the Rose Bowl to enjoy America's best tailgating and to make more unforgettable memories with the Bruins. Nico Iamaleava and the Bruins are ready to make an impact this year, and we need you cheering them at the Rose Bowl. Visit UCLABruins.com or call 310-UCLA-WIN to lock in your tickets today. 310-UCLA-WIN.
Ever wonder how dark the world can really get?
Well, we dive into the twisted, the terrifying, and the true stories behind some of the world's most chilling crimes.
Hi, I'm Ben.
And I'm Nicole.
Together, we host Wicked and Grim, a true crime podcast that unpacks real-life horrors one case at a time.
With deep research, dark storytelling, and the occasional drink to take the edge off,
we're here to explore the wicked
and reveal the grim. We are Wicked and Grim.
Follow and listen on your favorite podcast platform.
Mottek On Money continues here at 790 KABC. Disney, the parent company of ABC Television, locking horns with local broadcasters on the return of the Jimmy Kimmel Show tonight. Disney's decision to reinstate Jimmy Kimmel Live, raising the tension of ABC's showdown with TV broadcasting companies, two of them namely. Although ABC's bringing Jimmy Kimmel back on the air tonight, Sinclair Broadcasting and Nexstar Broadcasting, which together own nearly a third of the ABC affiliate stations across the U.S., say they will not air the Kimmel Show and will instead show local news. The network had suspended Kimmel indefinitely last week for his comments about Charlie Kirk's killer after pushback from Sinclair and Nexstar and pressure from the FCC chair Brendan Carr, who warned he might review local broadcast licenses if stations kept airing that show following Kimmel's comments. Joining us live now and following all these developments very closely is media and PR expert Michael Levine, who joins us live here this afternoon. Michael, thank you very much for taking the call today.
Hello, Frank. It's good to talk to you, and it's a very interesting turn of events. Jimmy Kimmel returning, but a third of the stations throughout the country will not air the programming. So I don't know what type of, is this a victory for Jimmy or not? And is it a long-term or short-term victory? It's hard to make sense of it right now.
Well, let me take a look at the market reaction to all this. Disney stock today down 31 cents at 112.25. Nexstar Media Group shares pulling back slightly, down 19 cents at 202 and change. And Sinclair Broadcasting up slightly at 49 cents at 14.72. There have been a lot of write-ups in all of this about how his audience has shrank over the years, and also that the show may be losing money and so forth. But what about, since we aren't a business show here, the economics of this from your standpoint?
Well, the show is not maybe losing money. It's losing money. And it's been losing money for some time. It's an expensive show to produce. The trend line in ratings has been terrible. I think that he's lost somewhere around 70% of his audience in the last few years. Now, that's not a good trend line if you own a business, right? If you have a product and you've lost 70% of your customers in a few-year period of time, that's not something to celebrate. So, and his contract is only another 8 months. So, I'm not sure it's a great time to buy Jimmy Kimmel stock, frankly. And his remark, you want to defend it on First Amendment grounds. You're free to do that, of course. But let's just say it wasn't particularly sensitive or classy or even appropriate given what had happened in the country. Imagine if, God forbid, a prominent Democrat like, say, Barack Obama or Kamala Harris, the same identical thing had happened to them, right? God forbid. And somebody on the right said that about Kamala Harris. How would that make a person feel? I mean, just because you can say something on First Amendment basis doesn't mean you should, right? In life, just because you can do something doesn't mean you should do something. And if he had, I think, any degree of sensitivity or class, he would have apologized. People make mistakes. I say things I regret. We all do, but I just don't think it was handled very well, frankly.
And now, according to Charlie Gasparino, for example, he's reporting a major legal battle is looming over Disney and major broadcasters depending entirely on Jimmy Kimmel. You just also reminded me, and I think somebody posted on social media saying Kimmel off the air for about a week, but Roseanne Barr off, 7 years and still hasn't returned. I remember you were talking about that years ago.
Yeah, yes, I recall it. No, it does seem that in some ways that the media power in the country certainly has shown a bias toward people on the left. And look, in terms of a business strategy, telling half of your audience in a country that you hate them, that you have seething contempt for them, this is not a good business strategy to sell something to them, right? So, I'm with Johnny Carson and maybe to some degree Jay Leno. Johnny Carson knew just if you're going to do politics, make it even-handed, and don't pretend you're a news show and don't lecture your audience. They didn't tune into your show for a lecture.
And it looks like these late night shows have exactly evolved into these politically polarized, really almost propaganda-like, right?
Yeah, that's a better word, Frank. They're not polarizing. They're propaganda. All of the hosts on late night television despise, loathe, and hate Donald Trump and the Republican Party. These are the same people that have said over and over and over and over and over again, Trump is Hitler, you're Hitler, you're a fascist. Now, if you say this long enough, hard enough, it wears on an audience. And this is what happens also with award shows, I think, very often. They don't tune in to award shows for a lecture.
Yeah, well, we remember when these shows were funny, and that's the other thing about this. The comedy's been stripped away, and it's gotten to be pretty crazy. So let's see what happens here as far as legal.
It does not seem to me on a business show like yours, this is a good business strategy. Audiences should be look. Isn't business about addition, not subtraction? Isn't that a fair remark? You want to add to audience, not turn off, half the country. It's just an unwise and I think unsustainable strategy.
No, it's very high stakes. situation we're watching here play out, and which could end up in court, as our pal Charlie Gasparino is reporting this afternoon as well. Well, Michael, thank you very much for taking the call here. We'll continue to follow this
Thank you for
closely
sharing your audience with me. Yep.
Nobody does it better. Michael Levine, media and PR expert, live with us here on Mottek On Money on 790 KABC. We're speaking on a day in which the major averages pulled back from record highs today. The Dow came in for a closing loss of 89 points at 46,293. The S&P 500 down 37 at 6,657, and the NASDAQ down 215 at 22,573. The volatility index moved up today by 3%. The yield in the 10-year note, which we watch closely, moved to 4.11%. It's moved higher since the Fed cut short-term interest rates last week by a quarter percentage point. Ironically, it was the Fed chair that took the air out of the market today, making some comments about equity valuations, and also noting the challenge of balancing the Fed's dual mandate on inflation and jobs. Stay tuned now for the 790 KABC News Blitz with Randy Wang. I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money on 790 KABC.
Hey, Bruin fans, want to go behind the scenes with your favorite teams and athletes? How about getting exclusive merch and opportunities to enter sweepstakes like sideline access at the Rose Bowl? Introducing Blue and Gold Society, UCLA Athletics fan membership program created to support Bruin student athletes. Members receive benefits like exclusive gear, videos featuring insider stories, and incredible experiences courtesy of UCLA Athletics. Sign up today at blueandgoldsociety.com.